There we go. We are live, Benjamin. This is good. I want to say you must have a beautiful fountain sitting by you, Benjamin. Either that or you're like about to wash your dogs because it sounds lovely. It sounds like it's beautiful. It's beautiful. Folks, thanks for joining. Grab yourself a cup of coffee. We're going to start in a minute. Smack the share button, the like button, the heart button, heart emojis. So I'm doing it right now. I'm just smacking every emoji that's out here on LinkedIn Live. We will start in just a second. And Benjamin, I'm incredibly jealous of your backdrop. Mine is a poster board with really bad tape sitting right above my head because I didn't tape it well. So I'm going to go out and create a walled garden like you have from now on when I do these because I'm incredibly jealous. It's not fair.
It's my neighbor's 12-foot wall that he sort of built around our tiny house. But
good luck. It doesn't matter. It looks beautiful. All right, folks. Good morning, everybody. Welcome to the 18th episode of FinTech Insider, the Breakfast Show US. This is a show from the folks of 11FS, bringing you interesting insights into the fintech and banking landscape. I am Sam Maule, the 11FS Managing Director for North America. I'll be your host this morning. I'm coming live from my 17-year-old daughter's bedroom in Jacksonville, Florida, which sounds about as exciting as it is. Do let us know where you're watching from. We love hearing this. We've had folks from Pakistan, India, oh Lord, Saudi Arabia, Istanbul, Ireland, Nigeria, Ghana that have been on the show, and even Oklahoma. So what the hell? Let us know where you're coming from. We'll give you a shout out. Ask questions, please, in the comments. Be more than happy to ask questions. We will try to get to every single one of them. Today, we are extremely thrilled to be talking to Benjamin Ensor, our very own 11FS Director of Research. Last week, 11FS released a research report about the implications of COVID-19 on financial services. Today, Benjamin's going to tell us the ins and outs of the report and see how financial services is coping with the situation going forward. And Benjamin, what part of the world is this lovely backdrop that you're in? Where are you at?
Good morning, Sam. So I'm in Kent in England, and the wall is my neighbour's wall that backs onto one side of my garden.
Well, it's beautiful. You can tell that Benjamin and I desperately need a haircut. I put that out on Twitter. I opened it up to anybody. I'll give them 2 cats and 2 teenage kids if somebody will teach me how to cut my hair without me screwing it up. For those who don't know you, could you tell us a little bit more about your role and what you do at 11FS?
So at 11FS, my role is to lead the research teams. We do a lot of research looking directly at customers and using the jobs to be done approach to try and understand who customers are, what motivates them, and what it is they're really trying to get done, that we then use to help clients shape their propositions, develop their propositions, think about the marketing, and so on. We also research the market and look at what are competitors doing. So if you bring a new proposition to market or you're changing a proposition, what's that competing with? What are customers responding to? What competitors are doing? How's the regulation changing a market? So we actually use a variety of different types of research methodologies to help clients make better decisions.
Yeah, I think that's actually something that's worth pointing out. A lot of people, when they first reach out to me, they try to figure out exactly what 11FS does. And, it's actually at times a hard question to answer because we do a lot. But I would say one of the areas we excel in is in research. Because, Benjamin, if you don't mind, prior to 11FS, where did you come from? What was your background?
So I started my career as a journalist in the City of London, covering obscure derivatives markets like repos and securities lending. Then I covered institutional investing for a while. And then I moved to a little company called Fletcher Research that was researching the internet, which clearly was going to be a big thing. And then that company got acquired by Forrester, which is a big global research company. And I built and led the digital financial services team there.
Oh, wow. We actually just had somebody who joined us from Bangladesh. That makes me so happy. A lot of people from New York, from Colorado, from Boston, and around the U.S., but I love when we get folks that are coming in internationally. So this is actually the second show you've done today. You were on the breakfast show earlier today talking with David Breyer. So we do this version at 3:30 in the morning, 3:30 a.m. U.S. time, which I think is 8:30 in the UK. But you talked about the newly released COVID-19 report that we've done. Can you recap for the American audience exactly what the report is and who do you think should read it?
So what we did is we took a look at what are the short-term, medium-term, and long-term implications of the coronavirus pandemic on the banking industry, the investment management industry, and the insurance industry. And it's really intended for anybody who's a decision maker in those industries, or indeed in companies serving those industries, to help people think through the implications of what does this mean for those industries and the people who work in those industries, and frankly, the companies that depend on those industries.
Yeah, and I think it's safe to say every industry is impacted right now. It's interesting because we were talking about guests for upcoming podcasts that we're going to have on, and Benjamin and I were just discussing right before we went on the air how somebody who I know that's a CEO of a chain that owns multiple restaurant chains across the U.S., a massive company. And we were talking about whether or not she'd make a good guest for FinTech Insider. And my reply was definitely, right? I mean, the restaurant industry is being massively, disrupted, if you will, by COVID and what's happening. And, we're seeing this across every industry, in all honesty. So let's narrow that down, though, because at 11FS, we focus on financial services, primarily insurance firms and banks and such. So what does the pandemic mean then for that specific industry? We talk about financial services firm and even more in the US, right? That is so we talk about digital only being 1% finished. Well, I think the COVID-19 crisis that we're going through really emphasizes that, don't you think?
Yeah, definitely. So in the short term, you've got this sort of operational crisis because you've had contact centers being forced to close down, particularly you've had the offshore ones in India and the Philippines shut very suddenly, but contact centers in the United States and in Canada having to shut down in some states because of the impact of the crisis. At the very time that you've suddenly got thousands of business customers, if not tens of thousands, and millions of retail customers extremely anxious about credit card repayments, loan repayments, mortgage repayments, all trying to contact their banks and credit unions to look at renegotiating some of those payments. Of course, we've seen just appalling numbers of people, losing their livelihoods over the past month or so. And then at the same time, you've got something similar happening in the insurance industry, where you've got a whole load of claims coming through, particularly on business liability insurance, but also things like travel insurance, wedding, event cancellation, huge uncertainty for customers about what does my policy cover, can I claim? So you've got this sort of massive short-term operational crisis that then feeds in to a medium-term sort of cash crisis, where all of a sudden the longer-term implications start to hit the industry. Because initially this isn't about the financial services industry, right? But as businesses start to suffer, so the financial services industry will start to suffer as well.
Yeah, it's interesting. When we went live, so we go live at 10:30 a.m. on the East Coast in the U.S. for this show. That's exactly the same time that the second round of PPP loans can be submitted. So there's quite a few of us that have a running bet going on how long this loan cycle will last, before the money's eaten up. Obviously, a lot of that is dependent upon the systems, but just the sheer volume of loan requests that have come in, will tell you that what a massive impact COVID has had. Looking back at the report that we just did, the report explains the OECD downgraded growth forecasting and has estimated that the U.S. will be worse off than the UK, which I actually found somewhat surprising. Can you explain why?
I can't entirely explain why the OECD said that, but I think the UK will be hard hit, actually. I think a lot of the developed economies will be hard hit. The UK is suffering badly because we didn't manage to control the virus effectively. I think the States is having similar challenges, particularly in sort of New York State. It's not so bad in some of the other states. I think a lot of it's going to depend on how quickly and effectively we manage to control the crises in various different states. Because When you have lockdown, that's when you're really damaging the economy. And when all the restaurants have to shut down, all the cinemas, all the travel, all the leisure, that's when the economy is getting really hard hit.
And as usual, we get great questions coming in, and Sid Rahar, based out in San Francisco, every show asks great questions. So he has one. He's already looked at the report. Great feedback, says it's an awesome report. Going to play devil's advocate though. You forecast rise of partnerships, marketplaces, AI, the need for fewer people and leaner organizations. But weren't these all true pre-pandemic? The answer is yes. Or are you saying how these goals can be achieved will be different?
I think it's a little bit of both. So what the pandemic is going to do is it's going to mean there's a massive shortage of capital in the financial services industry as a whole, as banks start to see a frighteningly fast rise in loan losses, as insurance companies start to see some huge payouts. And it depends a little bit on what happens in legal cases. The only way out of that is going to be to have substantial cost cutting. When you start looking at where can you cut costs, that's where digital becomes the answer. If you look at a whole series of processes and costs within financial services companies, the only sure way to reduce a lot of those costs is to embrace digital and to start eliminating those paper processes that are often so inflexible and costly today. Potentially also renegotiate some of the existing software contracts and so on. This isn't just about paper, but a lot of the answers are about faster digitization. So yes, you're quite right. It's about accelerating a move to digital that was already happening, because a lot of companies weren't doing it.
Yeah. Well, there was a lot of talk. I mean, we say that, right? We have this digital's only 1% finished. And what we meant pre-COVID was that means we've got a long way to go, and there's a ton of opportunity right there. I'll tell you what I'm seeing personally in the US from this is, especially from a government standpoint, both federal and state, we're definitely seeing the impacts of not actually modernizing systems of, hell, we've talked about on the show, the governor of New Jersey begging for COBOL programmers to update their unemployment system here in Florida. The unemployment application system is pathetic. I think I'm being generous when I say that. And we've seen the same with the frustration around updating E-Tran for small business loans. It's getting these applications in and making it simple for business owners. I mean, that's a massive gap. And I'm curious, this is something that came out of the report too. So we noted that JP Morgan Chase estimates that half of US small businesses have a cash buffer of less than 1 month. Let that sink in. 1 month cash buffer. This is obviously a huge problem right now. So do you think small businesses will learn from this? I mean, what's the immediate solution other than, applying for PPP?
It's very hard to say,
it is. Yeah.
Can learn from this, because this is very few people expected this, right? Bill Gates and a few other people saw this coming. Even if you had seen this coming as a small business, what were you supposed to do? Even if you managed to, eke out your cash reserves and have double the cash reserves, you'd still be in deep trouble. If you had to completely shut down overnight. So it's very hard to say that lots of small businesses could have done something substantially different. I think, thank goodness, in a way, we had the financial crisis because the banks are much better prepared than they would have been 10, 15 years ago. They've got bigger cash reserves. That'll help. But the only way out of this is huge amounts of government borrowing. And we've seen that happening in most developed economies, including the United States, massive, massive government borrowing programs. But even that's only sustainable for a certain length of time. And you're also setting up a bit of an issue between generations, because younger generations are going to have to pay off the debt that our generation is now incurring. So your children are going to be kicking you out of that bedroom, and they're going to be less than pleased.
Yeah. I constantly tell my kids I owe them apologies constantly for what they, especially my oldest kids, right? My oldest kids are out of the house and are working. And I'm like, man, I'm really sorry for 2008. And hey, 2020, I don't know what to tell you. I'm really sorry. But this does affect them, right? I mean, my oldest daughter has been unemployed because she was a hairstylist. My second oldest daughter is a nurse. So she's working ridiculous hours as an ER nurse in South Carolina. But what we've definitely seen, and we see this all the time, and we've noted this in the report, 70% of Americans living paycheck to paycheck. And that goes across, by the way, income levels, right? I mean, that's not just folks that are in poverty. But 70% of Americans living paycheck to paycheck, this is going to have huge impacts on the personal economy, as 22 million people filed for unemployment benefits in just 4 weeks. And actually that number is up to 26 million after the 4.4 of last week. I think most of us would say that doesn't account for gig workers, for contractors. So in reality, we're probably well over 30 million folks unemployed. So do you think the systems we put in place are adequate in the US?
First of all, I mean, these numbers are unimaginable.
They are.
So I have enormous sympathy for all the people who are in that situation, who've got family members and relatives and everything else in that situation. It'd be very easy to criticize governments. I'm not sure how you could put in place adequate responses to this crisis. I'm not sure any government anywhere in the world is looking at this and saying, wow, we did really well, we got nothing wrong. I think there are a couple of governments in East Asia that have done better at controlling the virus. In a country like Taiwan, Hong Kong, well, Hong Kong's a territory, Singapore and so on have been relatively effective. I think there are some advantages to the European social security systems. In this type of crisis, they have disadvantages at other times, arguably. So do I think governments are doing enough? I think governments are doing what they can, but can governments really move fast enough? I mean, the sheer scale of this crisis is so big that it's overwhelming government programs. You talked about the PPP program. That got overwhelmed. You said you're having bets with friends about how quickly the money will run out. The scale of this problem is just vast.
Yeah, I'll tell you, and I'm going to recommend this to our listeners. Mark Cuban, the billionaire entrepreneur here in the U.S., he owns the Dallas Mavericks. He's on Shark Tank, so like Dragon's Den in the U.K. He has talked quite a bit about this and the role government can play, because we're all playing armchair quarterback. It's a very American phrase there, Benjamin, where we're all sitting back and offering, here's how this could have been foreseen. Here's the steps you could have taken and what should be taken. And we're making this up as we go. I think that's just safe to say. But Mark Cuban had some interesting points that he has raised around PPP, around overdraft protection, but that he also sees coming out of this potentially the rise of unions again, which I went, excuse me. And his whole take is, how well are your employees being treated? Your brand will be known as how you treated both your customers and your employees coming out of this, and the steps that you took. And one of these days, I hope to ask him more about that statement, saying that he sees unions at some degree potentially rising back up. There's a distinct dislike for unions, I would say, generally in the U.S. So this is going to be an odd question, because Mark, Cuban raised this up as a possible upside. When you look at the crisis, and I hate using the word upside because we're talking about people dying, but I think a better statement is this an opportunity for reinvention of industries and solutions that we have out there?
I think the industry will be forced to reinvent. So we saw in the 2008 financial crisis that created this blossoming of fintechs and insurtechs, as people said, there's got to be a better way. We can do this more efficiently. We can do this faster, better with digital. You had almost the rise of sort of younger generation of leadership who said, no, it doesn't have to be all branch-based and check-based. We can do it better. We can do it faster. I think we will see some similar emergence of new ideas, of better ideas, some similar kinds of reinvention coming through. I think a really simple example is partnerships. I think we're going to see far more partnerships through ecosystems, as companies say, we don't all need to be doing check processing. Frankly, we don't need checks at all. We don't all need to be managing our own ATM estates. There's lots of infrastructure we could share. We don't all need to be doing the anti-money laundering checks, the know your customer checks. So I think we'll see a rapid growth of sort of shared services to try and drive down costs. I think we'll see a resurgence of interest in sort of financial health and financial well-being because of the relationship with mental health and mental well-being. And I loved the breakfast conversation you had on Thursday. Last Thursday. So yes, I think there are opportunities here. People will find new ways, smarter ways of doing things. I think we'll see some companies that win here, because as we start to see some companies running out of funds, they're going to have to sell. So you're going to get smart people who are losing their jobs. You're going to get good companies that run out of money. And so you're going to see other companies coming in and picking up those assets, picking up those people, picking up those ideas, and pulling them together and creating new, better things. So there is opportunity in this crisis. We will see a reinvention. It feels like a long way off now, but I think in 3, 4, 5 years' time, we'll look back and say, hey, wow, here are 3 great things that came out of the pandemic, but none of us would want to go through it again because of all the lives that we've lost.
Yeah, it's interesting. For those that are listening, one of the things we do at 11FS is every Wednesday night we do a virtual happy hour because one, it's an excuse to drink. 2, we make it. Yeah, it's more than an hour. It's more like 2. But we get together a small group of folks across the industry. So folks from banking, folks from VCs, folks from fintechs, to just get on and talk. Off the cuff, no topic. We just kind of roll. But one of the things I found interesting, it's been consistent over the past month, the comments that I hear, which is from a fintech standpoint, we're seeing a major shift, right? Money going not into marketing, not into business development, but money being poured into the engineering side of the house because they feel like they can really step up and move a heck of a lot faster than a lot of the incumbents. And so I found that interesting, right? This shift from pure marketing and pure BD to let's use this to move fast. Let's get the products. Let's take advantage of that. There's a great quote. I can't remember the founder that said this, but I've used this in a lot of talks where he says, startups can develop an idea conceptually, engineer it, and deploy it faster than incumbents can schedule a meeting. And I actually believe that, right? The larger you are, the harder it is to consolidate resources and to make decisions. And I actually think that's a great quote. So I agree with you. I expect to see a heck of a lot of innovation happening. I do expect to see partnerships take place. We're going to see acquisitions. Acqui-hires, I believe, is the term I hear all the time, where those companies that are well-funded, that are in good spaces will be acquiring great talent as part of this. And a question did come in, and I like this. Considering the U.S. has been described as being behind the U.K. when it comes to fintech industry, you think this will accelerate the development and implementation of truly digital propositions in the U.S.? I think we've said yes, but I mean, do you think, for example, some of these companies that have come to the U.S. like Monzo and 26 will actually see lift?
It's funny because people always talk about the US being a much more efficient market than the UK or indeed the whole European Union because of all the barriers between the different European Union countries, and that's quite true. But when it comes to financial services, of course, the United States isn't a single market. You have 50 different states with different insurance regulations and different banking regulations. So you can't enter the United States financial services market. You can enter the New York market, then New Jersey, then Iowa, or wherever you want to go next. So actually, that makes the US a little bit less attractive because it's a slightly tougher market to get into. I don't think it's easy for a European fintech or Australian or Chinese to just walk into the US market. You have to have a message that's going to resonate with Americans. You've got to understand the jobs that American consumers want to get done. And yes, Americans are similar to Europeans and similar to Australians or whatever, but you're not the same. The needs are different. The payment system certainly works completely differently. So I think we'll see some sort of foreign fintechs successfully expand into the States, particularly on the technology side. I think the front-end consumer brand ones, that's a much tougher proposition. If they can partner with a big established American brand, then that starts to look different, right? So if you can pull off the trick that Goldman Sachs and Apple have pulled off, so if someone can partner with an Amazon or a Walmart or some big established American brands, that then suddenly is maybe a very different game. I think it'd be very tough for very many startups from overseas to succeed in the States just like that.
Yeah, I know what I'm seeing so far in the U.S., and I would challenge anybody that's listening in the comments section, challenge me on this and point me in a different direction. But right now, I'm seeing the bigger get bigger. I noted this on a show last week. The deposits, we've had $1 trillion in deposits go into financial services in the first quarter of this year. I think 45% of that went to the top 4 banks. I'll just let that stand right there. They already had a monopoly, in my opinion, and now it's just getting bigger. From a retail side, Amazon, Walmart, Target have absolutely done incredibly well. Target announced their earnings or their in-store sales last week, and while in-store traffic died, their online activity jumped remarkably. Walmart has done a great job, and Walmart's also been investing now for years on talent, both on the AI side and the logistics side. Amazon, a couple weeks ago, Amazon announced they're hiring 100,000 workers just to keep up with demand. So, meanwhile, we're seeing retailers that had a good presence in the U.S., folks like Macy's, Neiman Marcus, that have been long storied brands in the U.S. that are, filing for bankruptcy or near bankruptcy because they didn't take on and they didn't invest in a digital model. From my standpoint, what do I think we're going to look like on the other side of this? I'm going to say it again. I think the big are going to keep getting bigger. I'm nervous for some of these companies. Alexander Hayes. I love the name Alexander because that's the name of my daughter, Alex. But a good question. And this is smack in your wheelhouse here, Benjamin. What are 11FS researching that peer firms are simply ignoring? What makes our research group unique? How's that, Benjamin? What makes us different?
I think where we're different is the sheer range of research disciplines we use. 11FS has got a small research group within a larger company. We're not a huge research group, but what we have is expertise in everything from sort of branding and marketing through sort of ethnography into sort of quantitative research, qualitative research, market research, and so on. So we've got a very wide breadth of skills. So that gives us an ability to get multiple angles on the same question and really look at a question from all the way through from the sort of customer through the regulation, the market, to really understand the proposition. And then link that through into what's practical, what can you actually build. So a lot of the research we do is part of consulting projects. But I'm not going to claim we're the best research team in the world. There's lots of great research teams. We're very good at helping companies understand their customers and how to build propositions that suit them.
I'll tell you, as somebody who's not on the research team, I'll go ahead and brag about us. Go out to our site, go out to 11fs.com, take a look at the research we've done throughout the lifespan of the company. We're about 4 years old now. What I like is that we are not afraid to adopt multiple formats, right? So within a research report, we'll have links to great excerpts from podcasts that we've done. We'll have great video to support that. We'll have, actually, if you use our Pulse product, for example, so Pulse is like the Netflix of fintech, where we have actual journeys of fintechs and banks behind the login screen. We'll show best in class for those. So, having someone like Benjamin come in, Benjamin, I'm going to brag about you. Having somebody from Benjamin come in, right, with the experience that you've had in the industry and the disciplines you have, sitting on top of how we like to do things different, to me is the perfect blend. Take a look at this new report that we have out, everybody. There's multiple links to it. This is just one example of the type of research we can do. What I'd ask you to do, read the report, reach out to Benjamin, ask him questions. Talk to Sarah Kachansky, talk to the group. We would love to talk through how we came to those findings and what they mean for us. And unfortunately, we've run out of time. I mean, go figure. But Benjamin, thanks for joining. Where's the best place for people to learn more about what you're doing at 11FS?
So it's as you said, it's on the website, or I'm on LinkedIn as well. So yeah, please ask me questions directly on LinkedIn, or get in touch with me by email.
Yeah, and please do, folks, because I mean, this helps us focus and learn where we can go next, right? What areas people are asking questions about. Well, everybody, thanks for joining. Tomorrow, I'm joined by Zach Cohen from Trulio. I always confuse Zach Cohen with Zac Efron. I am not having Zac Efron on tomorrow, but Zach Cohen is a very nice-looking young man from Trulio, a company that we love. Again, if you have someone who'd be perfect to come on the show, don't hesitate to reach out to either me or email us at podcast@11fs.com. Thank you for joining. A shout out again to the person from Bangladesh. Loved having you on. And yes, as soon as I can get out there, I will. Everyone else, thanks for joining. We'll see you tomorrow.